Join ninZaFamily. Download free indicators, settings, and chat live with pro traders. Hello, traders. Bollinger Bands is an indicator with several important applications, including identifying overbought and oversold zones, the squeeze strategy, and identifying the trend using a trend-following approach. First, we will go through the basic concepts of this indicator. This is Bollinger Bands. The pink line on the top is called the upper band, while the blue line at the bottom is the lower band. These two bands help identify overbought and oversold conditions, and they can also signal potential breakouts. Finally, there is the middle band. It acts as a trend reference line within Bollinger Bands. When the market does not have a clear trend and price moves sideways within a narrow range, you will notice that the upper band and lower band begin to contract. This creates a ranging environment where price tends to move back and forth between the two bands. In this condition, traders may look for reversal trading opportunities. First, observe when the price declines and approaches the lower band. In the first pair of candles, the price has not actually touched the band yet, so at this moment we do not enter a trade. Then, in the following pair of candles, once the price touches the lower band, this becomes the appropriate moment to consider executing a trade. If you continue observing the chart, you will notice that price often touches the band and then bounces back in a similar manner multiple times. When the market breaks out of a consolidation zone, price often moves away from the range and begins to form a new trend. During strong breakout and upward movement, attempting reversal trades whenever price touches the bands can significantly increase trading risk. Instead, a more conservative approach is to wait for the price to retrace back to the middle band and then look for trading opportunities in the same direction as the market trend. Trading with the trend around this area can help increase your edge while reducing overall trading risk. With our Bollinger Reversal Pro indicator, you can quickly identify reversal signals when price interacts with the bands. This helps save analysis time and allows you to determine more precise entry points. Now, let's look at how this indicator generates its signals. When price is moving down, if a reversal candle appears where the candle's low moves below the lower band and then closes back inside the Bollinger Bands, it indicates a price reaction in the oversold area and suggests a potential reversal. Conversely, when price moves upward and touches the upper band, if a candle forms where the high extends above the upper band and then closes back inside the Bollinger Bands, it signals a possible reversal from the overbought zone. However, trading with Bollinger Bands still has some limitations. For example, how to reduce noise in reversal trades or how to identify the early stage of a new trend. These are common challenges when using Bollinger Bands on its own. To address these issues, we use the superior RSI indicator. This indicator helps evaluate whether the market is in an overbought, oversold, or neutral condition. However, in this strategy, we do not rely on the overbought or oversold levels. Instead, we focus on the middle line of the RSI. So, why do we focus on the middle line of the RSI in this strategy? Besides its common use in identifying overbought and oversold conditions, RSI also helps us evaluate market momentum, meaning which side of the market currently has the advantage. When the RSI moves above the middle line, it indicates that bullish momentum is increasing. In this situation, we can interpret it as bullish momentum dominance, meaning buyers are in control and may continue pushing the price higher. On the other hand, when the RSI drops below the middle line, or RSI 50, it shows that bearish momentum is gaining strength. This represents bearish momentum dominance, meaning sellers are controlling the market and may continue applying downward pressure on price. By observing where RSI is positioned relative to the middle line, we can better understand the strength of the market and use this information to filter trading signals while avoiding trades that go against the dominant momentum. To make this clearer, observe the price position in this area. When the RSI moves above the middle line, the indicator immediately generates a signal, and price often begins to push strongly in one direction. This indicates that market momentum is shifting to one side. In other words, either buyers are gaining dominance and driving the price upward, or sellers are taking control and pushing the price downward. Now, let's move on to building a trading strategy using these two indicators. Step 1. Observe and wait for the price to move closer to the bands. This helps you identify when price is entering overbought or oversold areas, which may indicate that the current trend momentum is starting to weaken. Step 2, wait for the Bollinger Reversal Pro indicator to generate a reversal signal. However, we do not enter a trade at this moment as we still need additional confirmation to avoid market noise. Step 3, continue observing after the reversal signal appears. If the superior RSI then generates a signal indicating bullish or bearish momentum, this becomes the moment to execute the trade. This combination acts as a confirmation step, helping us identify the current dominant momentum in the market, whether buyers or sellers are in control. Step 4. After entering a trade, we monitor for reversal signals that appear in the opposite direction of our current position to determine when to exit. These signals may indicate that the market is about to change direction. The final step is validation. If a reversal signal appears from Bollinger Reversal Pro, but there is no confirmation from superior RSI, or if the two signals occur too far apart, those trades are considered invalid. The reason is that without RSI confirmation, we cannot clearly evaluate the market momentum at the moment of reversal, whether it is strong enough to support a new move or simply a short-term reaction. Now, let's look at a signal demo to better understand how this strategy works on a real chart. Thank you for watching the entire video. If you have any questions, feel free to leave them in the comments. See you in the next videos. Join the ninZaFamily forum to stay connected, ask questions, and explore ideas with our team and other traders. There's a lot more waiting for you inside. Links in the description. Thanks for watching until the end. If you found this video helpful, don't forget to hit the like button, subscribe to our channel, and ring the bell icon so you don't miss our latest content.